Let's welcome in Sharmila Joshi on that note to talk about what lies ahead. Sharmila, thanks for being with us. You know, the way global markets are shaping up, they would want us to believe that Brexit and Brexit concerns are history. But is that how you read it? Are you expecting 8,300 this week?
Not in a hurry, not so much to do with Brexit, but I think at 8,300, our market does look expensive. And time and again, we've hit 8250, 8270 and seen some or the other event comes, that comes and leads to a sell-off. And I think it has a lot to do with how the market is valued at that level. So very honestly, I think if markets were to cross 8,300, then we would just have to say, very convincingly, if we cross 83, 8350 and we stay there, then we'll have to actually say that we are in a, like the bull market has actually commenced. So I'm not in a hurry to actually take that call, and I think for the interim we are going to stay in a range, and for me the range is still anywhere between 80.50 to 82.50, and I think at least till for a couple of months more we should be seen very much in this range.
Okay, so not getting carried away with the moves, that's Sharmila's point of view. But Sharmila, what about the nature of stocks that were moving today? I mean, you can argue they've been hammered so badly. I'm talking about the likes of TCS or Tata Motors for that matter. A lot of these plays that are more closely linked to the UK. Would you advise buying if you've seen a dip where you found levels and valuations look interesting?
Absolutely, because I think even if the worst were to really, play out and you were to see the UK Parliament invoke that Article 50 and start the process of really separating from the European Union, even then I think, the sort of negotiations and talks will probably drag on for months, if not a year plus, which means that in the interim things will be status quo and work will carry on as usual. Perhaps new orders, etc. You might see a slowdown on that, but we do have a earnings season just around the corner. So I think in this earnings season there's definitely going to be no impact, and I would assume for another quarter at least. And in the interim you will get clarity on how a lot of the issues are progressing. So to my mind, actually, it is really Tata Steel which is perhaps at the biggest risk in that sense, because they were like in the middle of negotiating that sale of their plant in UK, and how does this whole event affect that? That perhaps is something that will get cleared in the next couple of months, and so that's perhaps at the biggest risk. And we are also seeing some amount of overall sort of a muted price sort of band for metals, and that could also play itself out on metal stocks. But I think for whether it is a company like a TCS, or I think even some of the auto majors or auto ancillaries which have seen a bit of a sell-off, I think they will sort of come back to their original prices, or if you see them really go down, that is I think where the buying will come.
Okay, Sharmila, just hold on to that thought. We've started our conversation on equities, but let's not forget the currency market, because even the rupees had a very good day today. It finally ended the session at 67.68 to the dollar versus 67.95 in the previous session. So we're talking about a gain of around 0.4% coming in, the biggest single session gain against the US dollar in over 3 weeks. Of course, it was universal in nature because a lot of Asian currencies were stronger against the dollar in trade today.